This afternoon, we're talking quarterly trade outlook, U.S. and Canadian hog numbers, and we'll take a look at restaurant performance index. Welcome to the weekly livestock market update on Brownfield. I'm your host, Meghan Grebner, with us as always to talk all things markets, University of Missouri livestock economist Scott Brown. Good afternoon.
Good afternoon, Meghan.
All right, we'll dig into some of these numbers coming up in a little bit, but first, let's recap what happened this week in the markets.
Yeah, on the cattle side this week, live fed steers were down $1.80. That now only puts them $1.25 above where we were a year ago at this time. Feeder cattle markets were up this week, anywhere from $5 to $10 higher on the week. The October live cattle futures contract was up $3.10, and the September feeder cattle contract was up $2 and a nickel. Choice box beef price was also down this week, down $5.20. Weakness on loins and flanks really were what led that lower. On the hog side, cash barrels and gilts were $1.15 lower this week. The October lean hog futures contract was up $1.70. Pork cutout value lost $1 and a nickel. That was really what was lower bellies this week.
As we take a look at thinking about like choice box beef, pork values as well, as we head into the end of the summer grilling season, going into the Labor Day holiday, can we anticipate maybe a little pullback or at least a little pressure on those prices moving forward?
Well, so certainly I think seasonally that's what's in store, given we tend to talk about the summer being the highs that we would have. When you look at that choice box beef price, this week's data, a little more than $3.10. That's now $4.35 below where we were last year at this time. So it's telling me we're getting back below. And so we could see some additional weakness. Now, I think some of the general economic indicators that we've gotten this week have been more positive. So maybe that demand is better than we would have thought, and maybe at some point we turn around. The pork cutout value, where it sits today, it's still $2.50 above where it was this time last year, but still much closer back to where we were previous year levels. And so again, I think seasonally we could move lower there as well.
I mean, I think we should just be grilling all year long.
Yeah, why shut the grill off is the right answer to this, right?
Maybe that's the new promotion for pork and beef to purchase at the grocery store. All right, let's take a look at weekly slaughter numbers. Obviously, we're heading into a holiday weekend, so I would assume there's going to be a little bit of that coming into play, but also temperatures this week have been blazing hot through a lot of the country.
Yes, I think hopefully this is our last big blast of really hot weather, but it has been hot. When you look at what USDA tells us for the week ending August 31, the run of cattle this week, 611,000 head of cattle. I think that's bigger than we would have thought earlier in the week. So maybe a bigger run, and we'll see a pull down in the run next week, given the Labor Day holiday. That was 3,000 head more than we did last week, but 20,000 head less than what we did last year at this time. On the hog side, a run of 2.429 million head of hogs this week. That's also down from last week, down 74,000 head, but up 42,000 head from where we were a year ago.
As we take a look at those numbers year over year, how are we stacking up?
Yeah, so cattle slaughter down 4.2% year to date, and hog slaughter up 1.3% year to date.
All right. So as of the Farm Progress Show this past week, trade has been a topic of conversation. As we take a look at the U.S. quarterly trade outlook, talk to me a little bit about this decline that we're seeing and some of the things that maybe are coming into play here.
Yeah, so USDA tells us for fiscal year 25, so the year that will start October 1st of this year, the export value will be $169.5 billion. That compares to a peak back in 2022 fiscal year of $196 billion. So we've continued to creep lower as we have gone from that peak of FY22. I think crop values down, livestock side, especially on the beef side, fewer exports. All that's leading to this lower export side. And at the same time, when you look at imports, they've continued to march higher for us. USDA suggests imports in FY25 of $212 billion, which would make us a net importer by $42.5 billion. That compares back to FY21, where we were a net exporter by $8.5 billion. So roughly a $50 billion change to the net import side from where we were just a few fiscal years ago. For me, the big change that I saw out of the report that we got this week from USDA, beef and veal export values down $1 billion for FY25 relative to FY24 really sticks out. Slightly higher on pork, slightly higher on poultry, slightly higher on dairy, but the big one is the decline in beef and veal export values.
How much of that is just availability in the fact that we're pulling from a smaller herd? How much of that is impacts from a higher US dollar and all of those economic factors that come into play? And what's that balance there?
Yeah, so a very good question. My very bad answer is it's hard to sort through all those things. However, a stronger dollar's mattered. It's made our products more expensive in some cases than from other countries in the world. I think in the case of beef in particular, we've just pushed these beef values at or near records. And I think that has slowed the interest in product from us. At the same time, we are going to be down in beef production again here in 2024. And so I think we're pulling a lot of stuff into domestic demand that, if we begin to grow beef production, I don't know, Meghan, 2 or 3 years down the road here, then there'll be more supplies available to go on international markets. Let's just not forget that I will still say I think the growth in consumption of our meat products in front of us will grow at a faster rate outside the United States than within it. And so it's important not to lose sight of where trade is at in these products. When we're growing supplies and might talk about lower prices, having some export markets available to us helps reduce that downside possibility.
When I think about just the beef global demand in general, we kind of ebb and flow with Australia, right? So like our herd numbers are down, theirs are growing. What does that do to that demand picture on the global market?
Yeah. So I think we are seeing Australia pick up some markets that we would have had a few years ago. And it's amazing how weather's played an impact here. So Australia went through some very tough weather times really before us. And I think that gave us an opportunity to get in some markets. And now that's all flipped back the other way. Australia gaining and us losing as droughts in different parts of cattle country from 2021 through 2024 have weighed on our ability to have additional supplies. So I still think that we have an opportunity to provide a higher quality product at the end of the day, but we can't rest. Other countries are going to continue to look at what we've been successful at. And Australia, I think, has been the closest at trying to mimic some of that higher quality beef and compete with us in some of those Asian markets.
US and Canadian hog numbers out this week. As we take a look at those inventories, what do we see here in this part of North America?
Yeah, so I think it's probably good to remind ourselves that, our industry here in the United States is much larger than the Canadian industry. what's 6 million head of breeding inventory here in the United States is 1.2 million head in Canada. So let's make sure we keep the relatives here in mind. I think when you look at what we got out of the report, right, so we've already talked to U.S. hogs and pigs enough that we know what those numbers look like. Breeding inventory that was down, yet market hog inventory continues to be up slightly. The story in Canada is very similar. Not down as hard on breeding inventory as we were, according to the report that we got out this week. Breeding inventory down 0.9% in Canada. But when you look at market hogs, they were up 1.5% in Canada as well. So it's a very similar story that we're telling of, hey, we're sideways to down on breeding inventory, yet productivity gains, although maybe slowing, have helped keep market hog inventory growing in front of us. So I think both countries are showing some similar numbers out of that report this week.
And we'll get another look at USD or US quarterly hogs and pigs at the end of next month.
That's right. And do we see any big changes? I have a hunch it's going to look, and this is way early to be talking about quarterly hogs and pigs yet, but my guess is it'll look pretty familiar to what we've been seeing out of these reports of late. Let's see where we get as we get a little closer.
Today, Scott, Restaurant Performance Index came out. As we take a look at the July numbers compared to June, not a wonderful story to tell, but not a horrible story, I guess, right?
Yeah, I don't like what we got out of the Restaurant Performance Index, frankly, for July. Now, I'll remind us that was in July, and I think we had some less positive news about the domestic economy at that time. There was still a lot of question about how long was inflation going to stick around, and are we really going to get an interest rate cut coming in September? I think it's changed a little bit as general economy, I think, showed pretty good strength when we look at GDP that we got out this week. But you look at the Restaurant Performance Index for July, it was down 1.3% from where it was in June. It was 98.9 in June. It fell to 97.7. For me, what do I not like? So we've been talking about this for a while, but the current situation index was 98.1 in June, fell to 96.9 in July. So down fairly sharply from what we had been seeing in that 98 range for much of the previous 4 months or so. Same store sales were down, customer traffic was down. That's kind of been a similar story, but just to kind of dot the I here, in May, same store sales, that component was 99.8, so virtually unchanged, not expansion, not contraction. And in the July report now, we're setting it at 95.7. So we want to keep watching. But overall, when you look at the Restaurant Performance Index, and just to give us a little bit of longer term perspective, so of course, it was at its lowest point in the worst of COVID in 2020, recovered in 2021. We had a 106, and again, I'll remind us, greater than 100 is expansion, less than 100 is contraction. So we were roughly 95 at the worst in 2020. We rebounded to 106 in 2021. But frankly, since then, we've been on a roller coaster down in front of us, and now set at this overall of 97.7. We want to keep watching that information as we think about food away from home expenditures exceeding food at home expenditures. Restaurant performance matters a lot in this discussion.
How much, thinking about like it popping up and rebounding up so much higher in 2021, thinking about stimulus funds, those types of things to maybe inject some money back into the economy after everything kind of tanked in 2020. Is this a more normal tightening of the belt that we would see when people are maybe uncertain about what's going on in the overall economy.
So perhaps I think the point you're making very well is that consumers had a lot of money relative to normal in 2021. I mean, let's not. So although COVID seems like a long time ago, worst of COVID, let me say that seems like a long time ago. We were really shuttered in many parts of the country in 2020. That shuttering then by 2021 was consumers ready to get out, ready to spend, and so I think that big pop up, which I'm looking at a chart that goes back to 2004. We were never as high historically as we were in 2021. On the low side, in the downturn of 2008, 2009, we were close to 96 in terms of that overall index. So we exceeded it in 2020. But now, as we don't have the same amount of stimulus dollars out there, and I think consumers still worried about high prices. Food has been on the agenda of late as well, high food prices. So I think perhaps this downward trend we've been seeing is as much consumers responding to what continues to be high prices and worry about how to make sure their pocketbooks can stretch given the high prices that they see today.
It'll be interesting jobs report next week to take a look at that. We'll also have farm income, monthly trade data out. Scott, what are you looking at specifically on the trade data side and the farm income side?
Yes, I'll take farm income first. So USDA's last 2024 estimate came back in February, 116 billion, a much tighter situation than we've been in on farm income for the past couple of years as well. I expect probably some downward revision to 2023 farm income. I don't know what to think about 2024 farm income yet. I assume crop receipts will be lower just given where crop prices are. Maybe production expenses will be lower than where they were back in February. Maybe livestock's going to be higher. So I think 2024 is harder to guess where USDA may be, but this is starting to be more of an issue for us to face. And so if USDA were to come in lower in 2024 and one wants to just think about 2025 for a second, what makes 2025 better? So it'll depend on crop size, et cetera, when we're a long ways away, but we're going to have to watch that that downward possibility. I can tell there's more pressure in the farm community than there would have been 6 months ago. So that's a big one. And I think on the export side, it's frankly some of the same things that you and I have been talking about all year. Beef comes to mind first of what exports really look like, given we continue to have fairly high prices. And of course, we'll continue to talk about additional beef imports coming into the United States as well.
Plenty of great things to check in on next week.
Absolutely, Megan.
Scott, it's always great to see you.
Likewise.
Our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments. And for a rundown of what's going on in the commodity markets, not once, but twice a day, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.